with Bitcoin mining, why is mining important and what is it? What does it do?
Yeah, that's a really good question, because I think there's a inherent belief for the layperson, and that's nobody's fault, that that mining is kind of a random process, that you expend a huge amount of energy to be in basically a lottery, right? You might win some Bitcoins. Couldn't be further from the truth. The truth is that when you mine Bitcoin, you're the security team for Bitcoin. Bitcoin is the largest supercomputing network in the world by computing power in history even. It's also the most secure network in history. And that security comes from mining computers. When we mine for Bitcoin, we provide an enormous amount of encryption. That's what our computers generate, is encryption for the network, so that if anybody wanted to try and create a transaction that didn't actually happen, if they wanted to hijack a transaction, say I'm trying to send you $100, somebody says, actually, I'd like that $100. Miners protect against that. Miners protect against what we call the double spend problem, which is where a wallet might have a certain amount of money in it, and I spend that money. If I go and try and spend it again, you'll have a miner go, hang on, I saw that you've already spent that money. That's not an acceptable transaction. So that's what mining does. And the more miners there are on the network, the more secure the network. Mining is actually a misnomer for what I describe as proof of work computing. Proof of work is, hey, I've expended so much energy to say, yes, I saw that transaction. I saw it, $100 from Simon to Darcy. I wouldn't waste the energy that I've spent saying that something was wrong when 10,000 other computers are going to say they saw that transaction and they saw it go down the same way. Proof of work has been a concept in computer science for decades, and it's never kind of gotten an actual use case until Bitcoin, which is you need to make it too expensive to do something that is erroneous or duplicitous or dangerous, because it would be harmful to the network that you're on. You've got to make it so expensive to be a bad actor that it disincentivizes that kind of behavior. So miners, we do spend a lot of energy. That is exactly the business model, to state forthrightly that we saw transactions occur the way that they did.
And that's where the incentive lies with proof of work, right? Is that the shortest possible distance between those 2 points happens? Because if you don't do that, it's very expensive, right?
Exactly.
So you're not incentivized to faff around with all the things that are erroneous, right?
Exactly. Yeah. You would expend far too much energy trying to create a transaction that was erroneous or wrong or theft or illegal, based on the protocol, that you just wouldn't bother.
Okay.
And it would literally cost you billions of dollars to try and create a transaction on the Bitcoin network that was fake or hijacking somebody else's money or hacking the network.
Okay. So the functions that mining perform is that it's creating security on the network.
Yep.
It's processing the transactions, right? As well?
Yeah. So that's where it gets slightly complicated, right? We have two different types of computer on the Bitcoin network. We have mining nodes, and then we have what we call a full node. And a full node is a non-mining computer, can be any computer, and all that does is it holds a full copy of the blockchain right back to the first transaction. It's got a complete copy of the ledger. It's gigabytes and gigabytes at this stage. They're the ones that all across the world, tens of thousands, if not hundreds of thousands, if not millions of these computers around the world go, saw that transaction, saw that transaction, saw that transaction, saw that transaction. Let's bundle them up in a block. Let's give it to the miners. The miners will compete to hash that block, and the miner that hashes it gets the block reward.
And the hash is?
So a hash is our measure of computation, right? So we measure our facility at Stacker in hashes per second. We actually measure it in terahashes because we're in the thousands of hashes per second. So a hash is how fast your chip is running, and how fast that chip is running is measured in hashes.
Right.
So when you hash the block, your computation is the one that solved the algorithm that completes the signing of that block.
Right. So it's basically, and I've heard it expressed as, it's computing power, isn't it?
It is very much. I mean, this is where I guess the luck element does come in. Every 10 minutes, there is one computer that is the one that signs the block. It used to be when there were just a few miners on the network and you'd be using a laptop or you'd be using an old desktop computer to do this work, you could do it with a single computer. And you could point your single computer at the network and you might just luck out and get all of the Bitcoins. You might have gotten 120 Bitcoins.
Wow.
Yeah,
right in the early days.
Right in the early days. You probably would have spent it on pizza, but yeah, you used to get quite a lot of Bitcoin for your work. Now we mine on what's called a pool. Because almost nobody, and we're even talking about the big publicly listed miners in the United States, even they can't actually risk not being involved in the pool that has the computer that hashes the block, because there are so many computers. It would be a bit like winning the lottery.
I see. So they all aggregate together in a way, don't they?
Pool, that's right. So a pool takes every computer that it's got in its pool and it treats them like one big computer. So when one of its computers signs the block, all the Bitcoin that was earned by the pool in that block gets distributed across the miners. What happens in using pools is that rather than it being a luck aspect, it becomes kind of a bell curve. Everybody gets a normally distributed reward for the amount of hash power that they've got. And the reality is you end up getting about what you should have got for your hash by pooling all of your resources like this.
The halving cycle relates to the rewards that get distributed when a block is successfully mined. Is that correct? No,
that's right.
Is that right?
Yeah, no, that's absolutely right. Halving cycles, very important to us miners, right? Because it is literally how much we're getting paid. So at the moment, every 10 minutes, the Bitcoin network, or 10 minutes or so, the Bitcoin network produces 6.25 Bitcoins. That's given to the miner that hashes the block. So that's down from 12.5 Bitcoin. That's down from 24 Bitcoin. That's down from 50 Bitcoin in previous halvings. Every 4 years or every 210,000 blocks, the reward halves. This is what makes Bitcoin a deflationary asset, as opposed to fiat money, which we talk about as an inflationary asset. You need more of it over time to keep an economy going. Bitcoin, there's always going to be less and less produced over time until it becomes exponentially and incrementally so tiny every 10 minutes that
you're folding a bit of paper in half every 10 minutes,
you're
infinitely
tearing it in half. Almost. Really, like you're reducing and reducing and reducing. And so to miners, this is really important for us, right? Because at some point in 2024, what we get paid to be a miner on the network is going to literally be cut in half from one 10-minute block to the next. And I think this is really important because this is what drives Bitcoin's pricing cycle. We have these kind of bull runs that have a halving in the middle, right? In between these times, we have these kind of boom and bust cycles in mining as well, right? This time last year, we had the highest return per hash for miners in history, measured in dollars, of course, not Bitcoin. But now, as of like literally today, we have the lowest returns per hash for Bitcoin miners.
So I've got you on a real low day, haven't I?
I'm going to crawl under this table after this discussion. Actually, yeah. No, but look, it's about kind of. I think this is a very healthy aspect to the cycle because it flushes out everybody who has kind of over leveraged themselves, who has wound up with too much interest, has signed themselves onto electricity pricing that's far too high, and just doesn't have the maneuverability to kind of be resilient. Our approach to this is just kind of weather this out by lowering our kind of state of operation, making sure we're kind of well capitalized going forward, and being ready and understanding what our kind of thresholds are for profitability, for break even, for what are our target returns really, and making sure that we're kind of enacting our practices as we've kind of planned them out for these kinds of situations. And this is where we're at. We're at a very low ebb. We don't have to hash all the time, right? We can turn off like that. We can turn on like that too. So we can utilize changes in the spot market for electricity pricing, and we can automate our on and off cycles for the machines, and we can just ride out high demand, and we can make use of low demand on the network, and that's what we do at the moment.
Okay.
Yeah.
So we have the Bitcoin miners.
Yep.
They perform an important function on the network. Security. There's a little bit of a transactional piece that goes on. Like when I send you $100 worth of Bitcoin,
Yep.
I know that it's secure and it's a legit transaction because the network is validating that.
Yep.
And then there is a fee though that gets taken off when I send you some Bitcoin as well, right?
Yeah, that's right. That's
and,
right.
And that's going to the miner as well?
Also goes to miners too. Yeah, yeah. But at the moment, that makes up an extremely small part of the reward for a miner.
Right.
It increases when the network congestion goes up, right? As with everything to do with Bitcoin, it's both a meritocracy and it's egalitarian in the way that it's kind of applied. So if there's low kind of volume on the network, you will pay very little to send your money around. And it's a really fair way of saying, well, hey, look, I'm going to send $1 million, or I'm going to send $1 billion, or I'm going to send $4. It's 12 cents at the moment. That's what it costs you. Now, when the network is extremely congested, that might go up to $20, right? Because, hey, we need to kind of create a supply and demand curve for the use of this network at this point. As we all know, Bitcoin does have a kind of a pretty hard cap on its transactions per second. So you can kind of program higher and higher fees to capture, to smooth the curve of use on the network. So over time, during these bull run cycles, Bitcoin's fanging, everybody's buying, selling, exchanging, sending to Binance, trying to withdraw from FTX, and they might spend $12, $20 on a transaction. Now, you've got maybe a few hundred transactions happening every minute. You've got maybe a few thousand that you can bundle up into a block. You're talking what, $2,000, $5,000 would be an extremely valuable block, but you're also talking about $100 and something thousand worth of Bitcoin as a block reward. So nobody's competing for the transaction fees. You're competing for the block reward.
So that's what I find interesting, though.
Yeah.
Is that there's so much built into the economics around how Bitcoin is structured that you stand back and you look at it and it kind of feels like this was designed by just an absolute genius and they've thought of everything.
Yeah.
But it kind of doesn't feel like that. Like when you look at the Bitcoin white paper, it kind of just feels like the Satoshi Nakamoto character kind of just worked on it over a few weeks and just thought, oh, let's just release this out in the wild. See how it works.
I know. And like quite liberally borrowed from other areas as well,
Yeah.
For one thing, never mentions a blockchain. That's really important. There's no blockchain in the white paper, but the way it was implemented turned out to be a blockchain. Proof of work was, kind of part and parcel with it. What was very central to the kind of the core protocol, and that's why miners and people who participate as miners and Bitcoiners in general feel very strongly about the way that mining is structured. That proof of work is here to stay. Like it is fundamentally part of how Bitcoin operates and works. And yes, it uses a lot of energy, but it's supposed to. Now, we do kind of have to balance that with where we get that energy from, and that's why we have that debate about renewables. But the other thing is that I think we don't talk about enough is what Bitcoin is likely to dematerialize in terms of energy use in the wider economy, right? There's so much that Bitcoin can facilitate in energy, rollout of renewables, addressing wasted energy or trapped energy, whether it's methane from landfills, whether it's solar and wind that's not grid connected, or what it can remove from the existing economy, right? When we think about Wellington Central Library, it's getting rebuilt, right? And they've just announced it's going to have half of what was on the shelves when it's rebuilt than their old library. Why is that? We've digitized it all. Internet, medium for information exchange, has removed the need for physical volumes of so much stuff. And I think about this when I started university, I took a refill pad, copied notes. By the time I finished my PhD, I hadn't printed a piece of paper in 6 months. And I submitted it digitally, right? The internet has cut out swathes of the physical world and recreated it digitally. The opportunity for Bitcoin is to do the same in the economy. What is currently physical, what is currently emitting, what is currently using energy, what is currently clipping tickets that doesn't need to be, that can be dematerialized by something without an intermediary. And this is what I think is really important, that we understand where Bitcoin's going. It's going through that same process of establishing itself as a network, establishing itself as trustworthy and as part of a functioning economy. And then it goes for the jugular on Bank of International Settlements, money transfer services, central banks. Well, I think it's got an interesting role to play with central banks. I don't know if you've ever Googled central bank checks and balances. This is something I kind of like to do for the whole world, because in government we've got the judiciary, the executive, and the legislature, right? And they're designed to be checks and balances on each other. That's a reasonably well-functioning, model. Seems to function for, liberal democracies around the world. Central banks sit outside this system, and they create fiscal policy for entire economies. The checks and balances for central banks come from inside, and the central banks' insiders are the banks. So, in effect, there's no fair check and balance. And this peaked for me when Justin Trudeau said, well, I think it's irresponsible to just opt out of inflation. And I thought, oh my God, that is just the most absurd statement, because you've got a central authority that just uses an entire economy's spending power as its lever to pull. Now, we know what happens around the world. We've seen it tens of times, probably in this century alone, when a central authority pulls monetary and fiscal policy levers and does an awful job of it. It creates immense inequality, destroys wealth, and creates incredible hardship, if not death, destruction, crime, and horror globally. Zimbabwe, Argentina, Venezuela, you see it everywhere, right? So the opportunity for Bitcoin is to be a check and balance against the policies of central banks, right? I don't think fiat money is going away. I think probably, like Michael Saylor says, we're likely to end up with a basket of maybe 6 currencies that survive, Bitcoin backing all of them. That's my ideal situation anyway. It's my ideal outcome anyway. But I think we're going to see the United States dollar, the yen, the yuan, and maybe a couple of other, the euro, pound sterling, etc. The rest will probably evaporate, and you'll spend all of these digitally, and you'll have a Bitcoin kind of savings wallet sitting in the back of everything and behind all of that, right? And when you've got a citizenry who can opt out of inflation or can opt out of high or low interest rates, you've got a check and balance against these kind of policies. And we've finally got an actual egalitarian and meritocratic system for financial policy.
That whole check and balance piece is something that I think, just even as citizens of a country, when you go through a phase where you're not really digging the existing government at all, and you wish you could opt out of just the whole system and just move to an island like Stewart Island or something, right? Let's all go to Stewart Island and
go seasteading.
Yeah, exactly. Form our own little island, because we don't feel free. We feel like we're always subject to all of these mistakes and other intentions competing for stuff, right?
That's a very, I feel like that's quite a libertarian view. I'm probably not that far down that pathway myself. I still think that
well, we've only just met, so
that's right. Yeah. Well, you never know. Stick around. We'll see how it goes. See how libertarian this actually gets. Look, I think that if you have a population that understands what and why the government does what it does, and then sees something that's really erroneous, really outside the realms of fairness and equity, and the mandate that they have to govern, that a check and balance like a Bitcoin is incredible. I mean, imagine if you could airdrop 0.1 Bitcoin to every person in North Korea today.
Mm.
The power of the regime there would evaporate in no time. Same with Venezuela, same with any country where they've got an oppressive and irresponsible leadership. If you gave everybody complete freedom over their money, their ability to buy and sell, their ability to move, their ability to store their wealth, it would be a completely different scenario for those governments.
It would. In theory, right? I guess when somebody's been in bondage for so long and you take away those bonds, they often take a while to realize how free they really are.
Yeah.
As evidenced by where we sit in New Zealand, where we don't realize just how enslaved we are, and therefore we don't reach for the tools that make us free.
But isn't this I think Bitcoin is, and I'm going to stretch. I was going to say I'm going to stretch an analogy, but I'm not. I'm actually going to stretch an allegory, which is that of Plato's cave, right? 3 people in a cave. They're tied up, facing one way. Behind them is a fire that throws a light on the side of the cave, and there's a puppet show behind them. This puppet show tells them what the world's like, and it says, this is what happens, here's how people do this, and blah, blah, blah. And it's completely made up. It shows them crazy stuff. Anyway, one person escapes, runs out of the cave, finds there's a whole world out there, and goes, oh my God, it's not like that. It's not like that at all. So they go back, tries to explain to the people who are still in bondage, still tied up, and still drinking the Kool-Aid of what they're being shown on the wall, and tries to convince them without showing. They can't do it, right? And that's the message here, is that, like, we've been okay with a monetary system which accepts a 2% reduction in buying power every year, right? And that's only a problem when that 2% becomes 7% or 10% or 40% or 100%. That's when inflation is a problem. Forget about the fact that over 10%, over 10 years, you lose what, 20% of your buying power? Actually, that's even non-compounding. You're probably more like 40 or 50% of your buying power over 10 years. We've been taught that house price appreciation in double-digit percentages a year is good. We've been taught that a bank only having a seventh of your deposit in actual assets is a good thing, and that the rest is all leveraged out. We've been taught that banks having the ability to control the money supply through the creation of that new money is a good thing. Then you become a Bitcoin and you realize you've been in Plato's cave. You've been used as a big lever that governments pull. God, I'm really starting to sound like a libertarian.
Yeah, see, it's working already.
To pay for the promises that they make in elections, to pay for, all sorts of stuff. Now, I think there's a lot that the government delivers: roads, social welfare, all that stuff is really good. But it is really good to have a lever to pull in the other way when somebody gets way out of line. In New Zealand's case, an engineered recession might be a good idea. We do have an interest rate problem. We do have an inflation problem, obviously working in tandem. But there are whole countries where the inflation wasn't engineered, it was negligent, and it did far more harm than, hopefully, a few quarters of slightly below average GDP growth does in terms of harm. And the lever that a population could pull to say, actually, we wholesale don't agree with this as a policy, and we're just going to move to the side until you sort it out, and then we'll come back. Sounds like an incredible way for people to exercise their freedom, to exercise their right to, be governed fairly, and to keep, a government in line. Sounds incredible to me.
Why would a government want to allow that? Because that's one of the common sort of objections, I guess, that a lot of people have towards Bitcoin, is that a government would never allow it, because I guess deep down inside, they know that they're stuck in the cave. And they know that
they're the ones with the puppets.
Yeah.
Well, I mean, the reality is they won't have the choice. That's my view. Like, it will be the first money that has not been created by a government, but is usable by anybody to store their wealth, to transact with who they want. Governments are going to have to learn to deal with it. It's like taxi companies had to learn to deal with Uber. They didn't like it, They fought it very hard, but at the end of the day, the groundswell was too strong. So yeah, look, there are a lot of ways that a government with an army could potentially declare war on their own population. But how far does that ever get any country?
Well, yeah, that's the question, I guess. And then that's where we're living in an age where you can take a little thread, pull on it, and it unravels things pretty quickly. And I'm talking about in the mind, right? Like you can
Arab
kind of
Spring, Iran at the moment,
totally.
a popular uprising for the right reasons. We have a huge amount of energy behind it. And the reality is, I don't think we're talking about a hostile takeover of the economy by Bitcoin. We're just talking about an emergent, and it is very slow growing, change to the way people transact, save their wealth, hold their wealth, use money, and it will happen under the radar until it can't be ignored. And it will happen all of a sudden once it gets to critical mass. And how would you ever dismantle it? Right?
Is that one of the reasons why perhaps we have such volatility with the price of Bitcoin is because the need for it is actually quite real, it's quite strong.
Yeah.
Yet our collective understanding of what that need kind of waxes and wanes over time, subject to how we perceive the incumbent system.
Yeah, so that's a really good point. So I think it's really worth contextualizing that need, right? What we know about who uses Bitcoin from a real needs perspective, people like refugees. So what we know is that a lot of people fled Venezuela to Colombia, more than 300,000 people based on IP addresses, wallets, transactions. About 300,000 people left Venezuela and used Bitcoin to smuggle their personal wealth out of the country, right? From a country that has demolished their economy almost deliberately. We see the same thing in Ukraine, people using Bitcoin to take their personal wealth out of these countries. And this is why I think it's really important that we understand both sides of the energy debate, right? People who don't use Bitcoin probably hate how much energy it uses. It's probably pretty fair. I drive an electric car. I don't like petrol cars, right? Do I get to decide people don't get to use petrol cars? No, I'm not the arbiter of that. But if you're a Ukrainian smuggling your or leaving Ukraine with your personal wealth stored in Bitcoin, the energy used to secure that is probably really worth it to you. You're probably absolutely fine with it. Same with you're a Venezuelan refugee. Same if you're a Zimbabwe. This week in Nigeria, the government are implementing a new CDBC, central bank digital currency. So they are limiting the amount of money you can take out of an ATM because they want people to use the CDBC so that they can surveil, they can keep capital controls. Nigeria has particularly draconian capital controls on the amount of money you're allowed to send out of the country. So again, Bitcoin fixes this. Unfair surveillance, unfair limitations on the way that people use their money. The energy used to secure a fair and free money that these people can use to escape that kind of tyranny is 100% worth it to me. Now, back to your question about the ebb and flow of pricing, I think, first of all, Bitcoin is an asset that's still undergoing its monetization process, right?
Okay.
That use case of store of value is still emerging, right? We still have other stores of value, property, gold, equities, bonds, all that sort of stuff, right? Bitcoin has an emerging narrative as a store of value. I think it's certainly a superior store of value, but it's going through that process. And it's going through the process of taking market share off all of those other ones. It's going through the process of learning to be a payments network, right? You lay a Lightning on top. You can use it at point of sale. You can use dollars on it and flip a dollar to Bitcoin and to another dollar, send currency payments, worldwide. $6.6 trillion used every day in foreign exchange. That's another market that Bitcoin is kind of going after in the broadest terms. It doesn't have a direction of its own, but users and developers are driving it in a direction where that's one of its use cases. So the value of it on a day-to-day basis, on the micro basis, less than a year, is obviously a factor of who's got the risk appetite for something that they know goes up and down, who actually needs it as a store of value, who actually needs it as a payments network, until it becomes really, really dominant in all of those spaces that it's, has a potential use case, it will continue to be volatile. Second is the halving cycle, which drives these large increases in price, because miners like ourselves, we know, first of all, that our pocket money is getting halved in 2 years. So we start saving our pocket money now, because we know that A, we're not selling it for half of what we used to get. We're going to sell it for twice as much as what we used to get, because we've got the same amount of money, same amount of machines, same amount of electricity going in. We need double the return. So we're going to start holding on to it, because we know that there's a related price increase. So we're going to hold on to it, create a supply squeeze on the price of Bitcoin, or on the Bitcoin that's available to buy, and we'll slingshot that price up twice as high, at least, as what it was before the halving. Then we get a real exhaustion of people who are prepared to pay that sort of money, and the market starts to drop off again, and we get these bear cycles. And I think, every Bitcoin cycle and every crypto cycle as well is a factor of these things. We're learning what these things can do. More people are learning what these things can do. We're learning that, it turns out it's not a very good hedge against inflation, because
not yet
anyway, because when inflation went wild, assets went south anyway.
Rates,
But it is potentially a hedge against debasement, right? Because one Satoshi will always be worth one Satoshi. $1 will not always be worth $1 worth of buying power. So,
So it's an interesting thing. Like there's a lot of threads there, right? And I want to maybe zero in on the energy piece in a second, because there's a lot of amazing stuff around that. But cast your mind back, if you like, several hundreds of thousands of years. Perhaps there's Neanderthal and there's alien beings that show up and teach these Neanderthal how to use tools, which then creates a desire and a need to mine metals from the earth. There's a new technology that starts to spread, and it was just lying in the ground, but all of a sudden they realize they can take it out of the ground and they can actually advance communities, because they've discovered something new that already was there because of this new technology. With Bitcoin, it kind of almost feels a little bit like that. Like we were just bumbling along in our own little world, dealing with the GFC. And then all of a sudden, 2009 rolls around and we're given the Bitcoin white paper, and things have changed since then. Where, in your view, or who, or what, where did this come from? Where did this technology come from?
Man, it's an incredible story, isn't it? I mean, I'm not a religious person, but this is as close to the world kind of being imbued with a gift that I've ever seen. An anonymous person writes an ingenious narrative and invents an ingenious protocol, gives it its first nudge into the world in terms of running the network himself for a while, recruits a couple of mates to, engage in that with them, and then goes, I'm off to some other stuff, disappears, leaves enough money on the table that they would eventually become one of the richest people in the world, based on the wallets we know were Satoshi Nakamoto's, and has never come back for them. And the way that it emerged so fully formed, I refer to it as it was kind of an immaculate conception. And this is why Bitcoin's special over other cryptocurrencies, right? There is no central entity to change the monetary policy, right? There'll only be 21 million Bitcoins. Nobody can change that. There was a campaign recently by the co-founder of Ripple to, quote, change the code, which was to remove proof of work from Bitcoin, make it a proof of stake model to reduce its energy use. It got nowhere, because there's no one to get traction with. Like, who are you petitioning? Nobody. You're talking about software that's completely agnostic to you, what you do with it, how you apply it, how many miners there are, how many nodes there are. It works the same. Other cryptocurrencies will always have a central authority who goes, don't love proof of work, let's move to proof of stake. Okay, so you're moving from a meritocratic model where anybody can participate to one where somebody has to have, and at last count, something like 38,000 US dollars to start a node and participate and be rewarded for that. Don't even want to measure that in New Zealand dollars, right? Like and it's the same with Ethereum and Cosmos and Ripple, and there's always somebody who can change the monetary policy out from under you. You can't do that in Bitcoin, right? It will always be 21 million. The block reward will always be what it is in a diminishing 4-year or 210,000 block cycle. And that's why it's so special. It is a pristine piece of public infrastructure that doesn't discriminate how much money you've got to send, how much money you've got in your wallet, how much money you plan on keeping in its account so that it can use that for leverage. Doesn't care about any of that. Doesn't care if you're in Venezuela, Nigeria, Auckland, New York, Ukraine, even Russia. You get the same opportunity to use it as anybody else, and you can use it in the same manner for the same things. I don't know who Satoshi Nakamoto was. I have a theory that it was probably Hal Finney with his own, pseudonymous doppelganger who kind of gave it the kickstart that they did. But I tell you one thing, I know it's not Craig Wright.
And I guess we could speculate on that. But what's so cool about that is that it's like, and I can't remember the whole story of Prometheus, right? Like there's this gift that's been brought down from the gods, right, and given to humanity.
Yeah,
and it's an interesting thing because it opens up the door for a new type of monetary mythology that we haven't really seen.
Yeah.
And when you think about the origin of the central bank, where it came from, who it's made up of, what its ultimate end game is, dare I say, you got to wonder, is this Bitcoin thing kind of like a little inconvenient pebble in the shoe thing that needs to be discarded at some stage? And maybe that's kind of what's going on right now with FTX. Like there's all sorts of interesting little rabbit holes you can go down and theorize about what they really think about this decentralizing power that is at play right now.
Yeah.
But instead of going there, which I'd love to, let's talk about energy, because I love Bitcoin because of the, I guess, the physics of it, maybe, right? Like it's storing financial energy in a digital format, which can be transported electronically to somebody else and released to create energy somewhere else. It's the most fascinating thing to think of it as stored energy.
It's incredible. Yeah.
And being a Bitcoin miner,
that's exactly how I think about it. That's exactly right.
Okay, so tell me the journey then about a kilowatt of power. You got this unit of power and it turns into an amount of Bitcoin. How does that actually work in practice?
Yeah, that's a really good question, right? So let's take the example of a miner who has a miner in their garage, right? You're like I've got a couple of friends like this, right? They've got a S19 miner that's the main, probably the biggest selling miner in history. Ugly, 2 shoeboxes stacked on top of each other with another half shoebox stuck on the side. And it's loud. It sounds like a couple of hair dryers going 24/7, and it's gray. And you stick 3 cords into it. 2 are power cords, and one's a internet and an Ethernet cable. That person buys electricity from their retailer, comes through a transmission line, comes through the local grid to the meter, and goes into the miner. That energy powers 3 motherboards of chips. And each motherboard has 32 chips on it. So you've got 96 chips per machine, just solving the same equation over and over. And the difficulty of that equation changes based on how many computers are on the network. But anyway, so you've pointed your chips at the Bitcoin network. You're in a pool, as we discussed, and you're part of this group that signs a block. 10,000 computers in that pool, and you get 6.5 Bitcoin, and you produced about 1/10,000th of it. So you get 1/10,000th of the reward that gets paid. That gets paid into your wallet, and then you can do anything you want with it. You could send it to the other side of the world, and you could buy shares on the New York Stock Exchange. You could send it to Texas, and you could use it to buy another kilowatt of energy and mine more Bitcoin in North Texas and some of those really interesting renewables outlets that are going on out there, where they tie growth in the grid of renewables to growth in the capacity of mining out there too. It's awesome. Revenue from mining Bitcoin is scaling renewables in North Texas in practice constantly.
So let me pause you there, because that's fascinating. So the growth in renewable production is partly being fueled by Bitcoin mining operations, which is constantly in search for cheap power to make the economics work.
Yeah, cool. Yeah, so that's exactly right. So you've got partnerships between two companies, right? A renewable energies company, a renewables energy company, and a Bitcoin mining company. The renewables company are sticking in wind turbines, but there's a delay between the wind turbines going up and being connected to the grid. Meanwhile, these wind turbines sit there idle, right? Along comes the mining company, stick a container full of mining machines on site. Before you've got it hooked up to the grid, plug in some Bitcoin miners, and you've got instant revenue. Instant revenue at 24/7, on 24/7, at a fair price for everybody.
Wow.
And how many more wind turbines could you install if you had revenue from day one than if you had to wait 6 months to get a large-scale grid connection up and running?
So if you, that's right. So like a Starlink satellite dish on the top of a shipping container.
Totally.
You got it stacked out with all the mining equipment you need. And effectively, you could be anywhere in the world where there was a brand new installation of any sort of renewable stream while you're waiting for it to be, or maybe you never actually get it connected to the grid, or maybe you do, but only for surplus and stuff like that. But that's kind of how it works in terms of expanding it, because that's the problem with most renewable, I guess, is that there's a renewable energy sources, that there's an awkward piece in time.
That's absolutely right.
Right?
And in hydro, your marginal cost per unit of energy is extremely low, right? The cost to create your next unit of energy is basically nothing.
Right,
you've already got it.
All the cost is up front, right?
Already got it. You're already doing it. The water's already rushing through. But you've got a hard cap on that, right? You've got generators that only generate X amount of energy. It doesn't matter how much more water you put through, they're capped out. Overnight, your resale price for each marginal kilowatt of energy is incredibly low. Fractions of a cent per kilowatt. During the day, it might be 10 cents. Amazing. Everyone comes home from work and plugs in their electric cars, demand goes through the roof and you're minting it. But when everybody's asleep and the cars are charged, the dishwasher's finished, the hot water cylinder's full, insulated and warm, there's nothing going on. Bitcoin miners would love to buy that energy from you, and we'll pay you almost 10 cents. Imagine what you could do if you had 30% more revenue, 50% more revenue, or revenue that you could bank on. And you can quite literally go to the bank and say, hey, my revenue's up 30% this year because I've got a Bitcoin miner here. They pay me every 10 minutes. I want to put in 3 more generators. I want to scale this up. I want to increase the size of the head that, powers the hydroelectric generators. All that kind of stuff. We're creating business cases for renewables rollout that just doesn't exist without Bitcoin. We can turn off in a second when everyone comes home and plugs in their electric cars and turns on their dishwashers. Cool. You guys take the load.
There's always somebody else somewhere else in the world that's mining as well. So
100%.
It's not going to affect the network.
The network's fine. The world spins. It's night somewhere. It's day somewhere else. Solar's online. And the dishwashers are on somewhere else. The dishwashers are off at home, whatever. But the network's fine. We just want cheaper electricity, but we want it renewably produced. So we'll buy it when it's cheap and you're not getting what you would from the grid. You can maximize your profit when the demand's really high. Go for it. We don't want it when it's that expensive. It's not worth it to us, but somebody will buy it for you. But when the demand drops, we're back on.
Because a lot of people right now, when they think about even the shift from where we're at right now with current means of producing energy to being way more on the renewable side, I guess they look at renewables saying, well, that's probably not going to work because sometimes it's producing and sometimes it isn't. And well, the only solution therefore is to create way more renewable than what you really need.
Yeah.
And you can
But
kind
then
of have
who's going to buy it? You know,
now we know Bitcoin.
Exactly. That's right. And this is the issue, right? So solar faces some really significant headwinds because generally when solar is absolutely fanging, it's summer during the day and the price for electricity is in the doldrums. Where does that electricity go? Well, I would love to buy it, you know, but it's the same for it's the same for wind, it's the same for hydro. There are these periods where the demand from the grid is completely mismatched with the supply profile, and somebody needs to match it. And this was identified in the White House report on crypto and energy use, which was generally scathing, despite being based on completely ridiculous and flawed assumptions and facts. They did say that what energy grids need are large, consistent purchases of energy, large, consistent loads of draw, and that's what we offer. You know,
electric cars and Bitcoin will solve all these problems.
They will, although I don't know if you've spoken to anybody who works in the power system. They're scared shitless of electric cars because when we get 1 million electric cars on the road in New Zealand and everybody comes home at 6 o'clock after work and plugs them in, there is no capacity to charge all of those cars. So we're going to have to come up with a solution that staggers it somehow, creates incentives for people to charge their cars at other times, or face a multi-billion-dollar bill to rebuild a grid that can deliver that kind of energy. So it's a bit of a catch-22.
And I guess that's an interesting spin-off too, because there was a conversation I had with Michael Every a couple of months ago, I guess now, around this, where we were talking about how maybe there's in the future, not too distant future, there's two interest rates, an interest rate that we all pay, and then there's a much lower interest rate that government would pay to access money to invest in infrastructure, specifically green energy infrastructure. So when you kind of think about that and think about how Bitcoin can actually help, you can see how using a sound money, which it is in and of itself energy, can actually help with the transition towards renewables without penalizing people.
And hey, I hate to rag on central banks. No way. Actually, I love to rag on central banks. There was a recent article that outlined how it was effectively central banks that are holding back investment in renewables. Meanwhile, what I would hope would be their biggest competitor, Bitcoin, is actively and demonstrably facilitating the rollout of renewables.
And nobody even asked it to.
Nobody even asked it to.
It's amazing what having sound money does, like what it actually does, right?
Yeah, that's right.
It helps build wealth, decentralizes power, and it helps aid in the transition towards caring for the resources that we have.
Fix the money, fix the world.
Yeah. The complete opposite, though, of what we've been told. Bitcoin is harming the environment. It's only used by criminals and gangsters. And it's a scam. It's volatile. Stay away from it.
On the crime thing, 0.69% of all transactions on crypto networks are illegal from scams, ransomware, etc. Between 2 and 5% of the world's GDP in US dollars is from criminal activity, mostly money laundering. There's more than $2 trillion. So several times the entire market cap of cryptocurrency flows into Wall Street in the form of laundered money every year. Criminals do not use crypto. Criminals use dollars. Well said.
Well said.
Yeah.
So thinking about just criminals and dodgy stuff happening with money lately, how does this kind of, what kind of parallels can you draw between this and FTX, for example?
Yeah. So Jack Mallers, who is CEO of Strike, had something really great to say about this, which he said he was not surprised to see that when FTX collapsed and their balance sheet was leaked, they didn't have any Bitcoin on their books. Because you don't use Bitcoin for crime. It's a terrible tool for criminals. It's completely transparent, and all the on and off ramps for Bitcoin are AML, right? You need to verify your identity to get money on and off. And this was perfectly exemplified by the hackers of Bitfinex, who sat on $3 billion worth of Bitcoin for several years and got caught trying to convert it to Walmart gift cards. You can't get illegitimate Bitcoin out of Bitcoin. It's incredibly hard. It's been ring-fenced, for better or worse. If you're a libertarian, for worse. But if you're, someone who wants to see it progress and become a really fair and usable form of money, then it's probably a good thing. So what FTX did was they created their own currency in the way that banks love to do. And they used that to create a big money go round. And what looks an awful lot like a Ponzi, from as far as I can see. And they used it for paying debts, and they used it to, inflate the value of everything that they had, and they used it as their one and only reserve, but it wasn't based on anything. Bitcoin has value for me because of the energy that I put in to creating each one, right? It cost me energy to put into it. There's no way I'm letting it go for less than the cost of that energy. It's the same with gold. Gold doesn't really have, gold has lots of use cases, but gold is valuable because it's got supply and demand, and the supply requires a lot of energy, effort, chemicals, processes to get it out of the ground into into a usable form. So there's no way you're letting it go for less than what it cost you to create. Same with Bitcoin. There's no way I'm letting it go for less than what it costs to create, unless under extreme duress. FTT token cost nothing to create. They didn't care how much they let it go for. They let billions of it go for nothing. And then it went to nothing.
Do you think Bitcoin's wasted on us? Like we obviously, and when I say we, I don't mean you and me necessarily, but I just mean like when you kind of understand it, and you don't have to fully understand it, but when you just understand the basics, that we have this finite piece of code that we can all own a chunk of, and that is the first example of digital scarcity, and you are still allowed to get it right now.
Yeah,
you are allowed to.
Yeah,
and you can hold it yourself, and nobody's going to charge you a fee for it. And you can be creative with how you hold it, so no one can find out where it is.
Yep.
Yet we still kind of look at it as, I don't need that. Why would I bother? That seems a bit too silly. Is it wasted on us?
First of all, everybody gets Bitcoin at the price they deserve, right? That's been a truism for a long time, and it continues to be true. But I think that actually the people who really deserve Bitcoin are the financially repressed, who are the people who are politically oppressed. I'm kind of glad that the crypto bro community has moved on to things like NFTs. I don't mean to bag NFTs, but I'm glad that the real Chad kind of cohort has kind of moved along to there, and we're kind of allowing Bitcoin to get on, and Bitcoin developers to get on with the serious business of Bitcoin, because it is a much more serious business than pictures of monkeys. I think that the people who really get Bitcoin deserve Bitcoin, and the people who use Bitcoin for what it's supposed to be used for and help it grow, help it be adopted, help forward the use cases that it offers, certainly deserve Bitcoin.
What's it supposed to be used for?
Bitcoin is agnostic. It doesn't care what it's used for. Satoshi Nakamoto wanted it to be a peer-to-peer cash. It's not fast enough to be a peer-to-peer cash. Lightning Network, which sits on top of Bitcoin, is fast enough to be peer-to-peer cash. I see it as a payments network, but I see it as a payments network that has a huge number of kind of almost unassociated benefits, right? The financial freedom thing, the ownership without owners, the ability to store money on a phone, on a computer, on a piece of paper, in your kid's head. That's incredible, These are all things that it offers us. How you choose to use it is totally up to you. That's what makes it powerful.
Yeah.
It's a platform. I like to think of it like the internet is the intersection of TCP/IP, HTTP, and HTML, right? TCP/IP is the way that computers talk to each other. HTTP is hypertext transfer protocol, is the way that information is sent between on a web browser. HTML is the form of file that displays the information in that HTTP will send. Bitcoin is the intersection of cryptographic signing of transactions, of blockchain, distributed ledger, and of proof of work computing. Where was the internet 20 years ago? It was, if you were me, it was looking up Radiohead lyrics, not on a search engine, but on a directory that you looked up, and you went to the R's and you found Radiohead, and then you found lyrics. Now it's, for better or worse, Instagram, Facebook, Amazon. I mean, how many internet connected devices are there in this room? In 20 years, where will Bitcoin be, right? When you've got a critical mass of developers who are putting their effort into creating stuff that sits on it and utilizes it, where's it going to be? What's it going to dematerialize? We were talking before about how the internet has dematerialized so much information that we don't have to build libraries so big anymore. And what libraries are is completely different. The library I grew up with as a kid was full of books, nothing else. Now my local library has 3D printers. It's got a cafe. It's got meeting rooms and spaces. Totally reinterpreted what a library is. It's now a community hub. It's now a place where you access things that you don't necessarily want to have at your home, but are still useful and kind of in the community interest to house. When you've got an internet for the exchange of value, what can you dematerialize, and what of what already exists will you need to improve to suit a digitized financial system?
And that's kind of where we're at right now.
This is the question I think we're asking is, okay, so we've built an internet for the exchange of value. It's perfect. Very near perfect. So you've got this platform for people to build on, right? Cryptographic signing transactions, blockchain, proof of work. On the intersection of those things, what are people going to build that takes us from Radiohead lyrics websites to Facebook, Instagram, Shopify, all of these things in the future? Give Bitcoin 20 years and it will have manifested stuff that you can't even imagine from now, because we just haven't had the thinking and the time to really build out what every incremental change, every incremental development leads to a new idea, a new implementation, a new use case.
Right.
We had to have Friendster, to have MySpace,
to
have Facebook, to have Instagram.
Yeah.
What do we have? We're going to have Strike. We're going to have what? 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 That's the question that I think Bitcoin begs, and it's what it offers us. The important thing is that and there are people who are going to do the work to develop that.
Digital wealth for the digital world, right?
Digital wealth for the digital world.
That's good. So bring it back down to mining, which is what you're involved in, Bitcoin mining. We can go to work. We put in our effort. We exchange our labor, sometimes some of our capital, and we're turning it into a currency. And the value that the currency contains will leak over time. So our primary motivation, if we can, is to convert some of that surplus currency into investments, just like charging batteries, that we're storing up the value to be released at some stage in the future. That's kind of investing, and that's like the mining, financial energy, and then that energy gets discharged back into our lives so that we can run our lives in the future when we don't have our income. So you're kind of doing that with Bitcoin mining in a way, right? You have to think about the completely different variables that you have to think about.
Yeah.
But that's kind of what it is, right? We're training our capital, in this case, lots of chips, lots of mining gear. We're putting power into it. That's like our, instead of our own human joules, we've got kilowatts now powering these miners, and it's converting it into Bitcoin that you can kind of move it around and discharge it later on. Where are we right now in the mining community? Like I'm guessing with the price of Bitcoin quite low, and especially with the cost of energy in some places getting higher, not lower, is the future of mining at risk? And what will it take to be a successful miner in the next, say, from now up to the next 5 years, or up to the next halving cycle, let's say?
Yeah, there's a really good question, because as I think I said before, we went from the highest price per hash, which is our unit of input, to the lowest within a year, right? That has created a lot of hurt for miners. What we're seeing is a shaking out of the miners who were over leveraged, who had signed on to too expensive electricity plans, who were locked into those contracts, and who there was a really an incredibly emotive and virtuous narrative in miners in the previous bull cycle, which was, I'm never selling, right? I'm going to take fiat money, and I'll do that through raising capital, or I'll do that through public listing and share issues, and I will never sell my Bitcoin. I'm going to take dirty, cheap fiat, and we're going to funnel it through, and we're going to turn it into Bitcoin. I'm never going to sell it. It hasn't worked for anybody. In fact, it became a rope around, it became a weight around their necks when the debt collectors came knocking, and what you could have liquidated at $69,000, almost $70,000 a year ago, you're begging for $17,000 for today. So what does it take to be a successful miner? It takes being a little bit pragmatic about this. As we've discussed, we're going through the monetization process for Bitcoin. This is not a fully monetized asset. The world does not understand its value perfectly yet. Retail markets don't attribute such value to it that they will help prop up its price like they would gold or silver or another asset. The approach that we take is kind of a whole balance sheet approach. And this is, in well-run miners, I have to say, this is not my idea, but in well-run miners, you kind of have to look at the full balance sheet. What assets do we have? What liabilities do we have? How much Bitcoin do we have? And how much fiat money do we have? And can we hedge successfully against the value of each of those? And can we keep a tight, heavy lid on our liabilities, our outgoings versus our incomings, and maintain some runway for when things get tough? You have to keep an eye on the price of your inputs. You have to keep an eye on the price of your assets. And you kind of have to understand that for the foreseeable, it's going to be a very marginal business. In 2024, when we're right on the halving, we should be halfway into another bull cycle, and it should be all gravy.
So it's about building now.
It's about building now, but building sensibly. No leverage, no excess loans. Don't get locked into contracts to purchase stuff that you don't know if you're going to need, that you're just scrambling to buy. This was the big drive for miners in the last Bitcoin cycle. China kicked all the miners out of the country. I say all. There's still a huge amount of capacity in there that's under the radar. But they kicked all the miners out, and all of a sudden it became incredibly, incredibly profitable to mine Bitcoin. There wasn't a single miner left on the shelf anywhere on the planet.
You're talking about the actual units.
The units, yeah. The units, the ASIC miners. There wasn't a single one left on the shelves anywhere. 3-month lead times, 6-month lead times on some models, because it didn't matter what you were paying for electricity. You plugged it in and you were minting cash. It's a very, very different story today. So yeah, it's a pretty good time, and we engage a lot of startup communities around New Zealand, just because it's great to have that support, and there's some really fantastic resources out there if you're a startup. And people keep asking us, like, how can you possibly expect to mine Bitcoin profitably in New Zealand? There's so many places around the world with cheap electricity. Have you looked lately? It's not necessarily the case.
So where are you with Stacker? So I
know we dropped the E to be cool, and all it really does is cause confusion. But
that's cool. But if people want to learn more, they can go to Stacker with no E.
Stacker.co.nz. Yeah, that's right.
.co.nz. And so where are you guys? And like, is this something that you're kind of just, in light of current market conditions, you're still working on, I guess, the strategy and timing of scaling up because of the economics of it right now, or are you fully out there?
So we have our facility in Christchurch, central Christchurch. We're active in kind of just continually sourcing cheaper and cheaper energy there. But what we're working on is containerized solutions, shipping container full of miners that we can move right to the site of generation, get rid of the transmission costs, get rid of the line costs, work with these renewable generators and renewable asset owners to bolster their businesses, to provide them that consistent interruptible load, so consistent load, but interruptible when they need it, and to get really fair and well-priced energy for both us and for them.
Okay,
and awesome. We're ready for what comes next.
That's good. And that's the most important thing.
That's right.
Hey, yeah, thanks for coming to talk with me.
My pleasure.
Yeah, you've taught me so much. Like when I came into this, I knew you were coming in, so I did a little bit of reading, and I kind of formed a deeper understanding of just the mechanisms behind how this whole thing works. And I genuinely struggle to figure out how central banking works. And I try very hard to try to figure it out. I can actually understand the economics of how Bitcoin works.
Yeah.
And that should say something for the everyday person who's trying to build everyday wealth. Right. So thank you for what you're doing.
Hey,
and
pleasure.
wish you all the best.
Thanks a lot.
Cool. Go on.